Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots for the markets today, Friday, April 1st. No fooling, it is April. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. This morning, we are going to be talking about the jobs numbers that just came out in the United States. We just had non-farm payrolls come out. They came in lower than expected. However, they adjusted the last number up. So net, it's a wash. It's actually still slightly more people being employed when you take a look at the combination of the two numbers. And you see that with the unemployment rate actually dipped a little bit. Now, going into these numbers, we've also seen some reaction in the markets. Equities initial reaction. We had this crazy day. We spoke about it yesterday. It was the end of the quarter. We were expecting institutional traders to mark the market for the end of the quarter. We didn't know which way they were going to go. And in the last half hour of trading, we got some pretty significant selling, and they marked everything down because it's the end of the quarter. Everyone wraps their books, and now you start a brand new quarter. They wanted that number lower. Which actually marked the worst quarter we've had in quite a while. I'd have to go back and look to see. The market did not have a good quarter. We were negative across the board. Now, after that, markets were just kind of creeping higher overnight. The jobs numbers comes out, and the initial reaction was a little bit of a sell-off. We'll do some analysis, and we'll see what we think from there. The other thing that we're getting out of this is the inflation pressures. And we are seeing the yield curve, the 30-year, the 10-year interest rate actually popped very slightly above the 30-year by 0.01%. We're getting that inverted yield curve, and that starts screaming, uh-oh, here comes a recession. So while we're trying to get rid of inflation, we've also got to, if we're going to go into recession, how do they heat up the market? Well, Houston, we've got a problem. They're conflicting interests. And so what is the Fed actually going to do? We will learn. Before we jump into the charts and Brian goes through some of the headlines, because we got other headlines, what's coming out of Europe and some movement in oil as well. I do need to share that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And here, and by the way, this is that close. You can look the last 30 minutes going into the close yesterday. Well, bam, they smacked the market, marked it out for the end of the quarter. Since then, it's been a grind up until the number came out. And we've got this one negative. We got this one red candlestick. All right, Brian, let me flip it over to you, and you can take us through some of these other, through the charts, but we've also got news out of Russia
Yeah.
and it's oil and nat gas as
Yeah.
well.
Yeah. Overall in the currency markets, it's weird. It's a non-stereotypical day. It's actually rather flat minus the yen again. The yen has been a story. And actually, look, shifts in yen signal lost its mojo as supreme safe haven. So a little bit of news out there. But again, the yen is the only thing moving again. So the Aussie yen, dollar yen, pound yen, euro yen are really the only ones moving all up. And it's kind of that extreme scenario straight down. But again, if you remember what, the Fed, their version of Powell said, it, until we hit 130, it's not really an issue at all. It actually helps our economy out here. And it's funny, all you hear is negative, 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 but we're still hovering around 122.68. I mean, the 130 is, I got to scroll all the way up there. I mean, this is a 30-minute chart, but you can see it's all the way the heck up here. And that's when it becomes a problem. And all they need to do is raise the interest rate just a little tiny bit. And boom, it comes right back down. So it is interesting. It's providing a lot of opportunity in different trade setups. And that's it. I mean, things like the dollar Swiss, 9, which again is kind of an odd place. Pound yen, minus 12 is nothing. Euro pound, and again, because the war is not over yet, we're seeing strength roll back into the pound a little bit more. And again, dollar CAD even, minus 14. I mean, oil is under $100 again. So it's kind of strange. The market is looking at all this, and I think trying to absorb everything and be like, what the heck is going on here? And again, let me cover the headlines first. I mean, you see there's a lot of small headlines in here, but some of the bigger ones that we were saying, hey, listen, this is important. I mean, one, the Kremlin says that Putin has been briefed, and again, I don't know anything about this one, but he's been briefed on the attack on a Russian fuel depot near the Ukraine. I don't know if that means it's actually inside of their borders, but that would get really interesting if Russia itself is now being attacked. Wow, that's a scenario that could get really, really interesting. Some of the other ones is this one right here. We saw that Russia has suspended gas flows to Germany through this pipeline, and they said it's actually flowing in reverse. I don't know if they're taking it away or I don't know how that works. I thought once it went there, but yeah, it's going the opposite direction now. So there's one suspension. Remember, Germany has all these plans in effect. Um, you know, uh, here's the what we've been really looking for is that the requests have begun to start sending out gas for ruble payments to switch. Germany's like, wait a second, you got give us we need 10 days. You need to tell us how those procedures
I
happen.
can do it.
Which is and again, it's more how do we make those payments? It's kind of funny because the G7 was like, no, we're not doing it, and Russia says, oh no, we are doing it. And again, the requests have been sent. So we've sent the requests and contracts. They've raised flows to Italy, Poland, Turkey, and they said refilling storage before winter is difficult. In the EU, and what they mentioned is the payments for these. They're not cutting it off. Russia says we're not cutting gas off on April 1st. The payments for the deliveries now aren't actually due till the middle of April and even the beginning of May. And again, I have natural gas. I actually have propane. When I get it, I get a bill a week after it gets delivered. So it's like, okay, that makes sense. They deliver it, and then okay, how much supply could you take? Okay, now we'll send you the bill. So it means we got about 2 weeks before this really, really heats up. So it should be pretty interesting. Um, and that's kind of it. Like I said, hitting fuel depots, people are like, I'm not in the military. I can't figure it out. I think we'll hear more about that today. But I will say this hearing that there's again, could Russia have blown up their own depot? Would I put it past them? No, because remember, they were looking for like the false flag operations. Like, oh no, they shot a missile at us. It's like, no, no, no,
Yeah.
that was your guy that ran over there to shoot it back at you guys so you could start the whole, could it be one of those things?
Yeah.
Yes. But the fact that the United States has not said, oh, Russia's blowing up their own stuff to say it is kind of like, because they're trying to jump ahead of what's going to happen. I don't know. We'll see. I mean, could it be one strange guy that tried to drive
It
a
could
truck into
also
it?
just
Maybe.
be one. It could be that you are hearing stories of Russian troops sabotaging their own equipment and refusing to fight. And there are places where so we just don't know. So it
Yeah.
is a headline. It's interesting.
Yeah. Yeah. But again, on Russian soil makes that even more interesting. And again,
Yeah,
the
it
fact that
does.
the Ukraine and this is why I think it kind of it's like the extra spice, the extra pinch, the fact that I cannot confirm nor deny reports of Ukrainian involvement in that strike. If they didn't do it, they definitely would have said, it wasn't us. We didn't do it, guys. Your own people are doing it. So the fact that they can't confirm or deny to me is kind of like, I'm not going to tell you. I know, but I'm not going to say
Yeah.
anything. I feel
So
like you're going to deny that one because that could ratchet this up thing a lot. So I think this weekend, be very, very cautious. Again, I'm very kind of risk averse myself, even though, again, I'm much more of an intraday trader. I will say, when you're hearing these things, shots fired back and forth, this weekend could get really, really interesting. So be very, very cautious and look for gaps on Sunday night. Now, U.S. based data today, again, Euro data was at 7.5. I'm going to say, I'd like to say a little bit of a surprise, but it's almost 1% higher. There's been a couple of articles out today talking about this is really ratcheting up. Where is it in here? Really ratcheting this up. I mean, last month it was at 5.9, jumped all the way to 7.5 in March. And they're like, this is, it's really raising the pressure on them to start raising prices because things are starting to get out of control. Couple interesting comments in here. I mean, they're breaking it down. They remove food and gas and everything else, but they said any cut in the Russian gas supplies would also quickly feed through customers, boosting
for
prices
sure.
as governments are struggling. And what did we just hear? Russia just suspended some gas. So this is one of those things. Militarily, maybe the Ukraine is not going well, but it's kind of like you're playing their game, and now they're starting to cut your supplies off. Inflation's about to go crazy there, and they can say, "Well, we don't know what's going to happen to Ukraine," but the problem is nobody's going to be able to afford anything because inflation is going to go
The one
nuts.
thing that they've got going on their side is that gas is used for two purposes. One is to cook food. The
Yeah,
other is to heat. And as we come in further and further into spring, uh, the demand for the heating piece is gonna dissipate. So the question is what do they have? I mean, by the way, I love cooking on gas versus like an electric stove.
Yeah.
So it'll be interesting to see. The timing on this. They could get a little lucky because demand may not
Well, they
match
mentioned it
the.
here, but it's important to look at this one, right?
Yeah.
Oh, it's not this article; it's the other
And
one. They
that's
mentioned that,
only a very short term band-aid because
yeah. Well,
fall
they
and
said
winter
that
will
they
show
won't
up.
be able to. Yeah, if they halt gas, there's no way that they'll be able to fill the tanks for next year. Is kind of
Right.
where it comes from because there's no supply.
There'll
There's no
be
additional supply.
none.
Yeah.
That's where the
Yep.
problem will be. They're going to have
Mhm.
a handful of months before absolute crisis.
Yep.
Um,
Yeah, they're close, but like I said, remember too, it's they yesterday they put in that 3-step, or 2 days ago they put in that 3-step program that it won't affect supply for homes and hospitals, but it'll affect industry. Germany's the industrial, basically the heart, the backbone of all industry in Europe. So if their industry in Germany is halted, whew,
yeah,
that's a big kind of blow, as well as inflation going out of control. Listen, you have no industry to fund it, and you have inflation out of control. It's like, what are you going to do? Do you have to raise interest rates to control the inflation because you can't produce anything? That's why I mentioned
yeah,
before that inflation and retail sales numbers are not as important right now because retail sales are lowering because prices are getting too high. It's not that we don't have supply. If you combine that prices are high because you can't build anything, that's a completely different scenario,
yeah,
right? Where it's kind of
different
it's
setup.
like the worst. Yeah, it's the worst of everything. So that's bad. But I mean, the U.S. data today, the average earnings thankfully came in as expected, which means at least this month they went in lockstep with what inflation is doing. The worst case scenario is inflation is rising, but people are not getting paid anymore because that makes the
Right.
situation worse, worse, worse. At least this time they both kind of stepped forward. But remember, the inflation number was already higher, so a zero point 0.4 increase in a high number is bigger than a zero point 0.4 increase of no of a low number, right? So it is still a little bit disproportionate. Non-farm number came in a little bit lower, but again, they raised it up by 80, so it's still a little bit net positive on that one. So of course that's going to be lower. Obviously, the unemployment rate went down. This is not as important, but this is a big political thing. Look, we raised it the
Yeah.
lowest unemployment rate ever. That's great, but it's more about kind of what happens here. You didn't hire as many people, though you kind of messed up the number before. So, again, I'd say the employment situation is mixed, but it's absolutely one thing that cannot be said was they can't complain about the labor market. There's
Yeah.
but it's like, oh my God, we're at 0% unemployment rate, but the labor market is tight. We can't raise. You can't. The PCE yesterday, again, we were at a 40-year high again since 1983. There's nothing. They can't say anything. So really, at this point, I mean, I guess they can try to use Ukraine and the fact that they're cutting gas supplies off. But
We're
again,
getting a
how
half
is
a
that?
point.
Yeah,
We're going to
it's
get a
it's
half a point.
I really don't think there's any other way besides us getting that half point, and it's going to affect the overall indices. So, one of the interesting things about right now, again, the VIX is up. We had that big spike yesterday, right at the end, and kind of a big spike up, big spike back down again. It's kind of flatlined. Dollar, it's up a little bit right now off that data today, but it is flirting around that 50% retracement level. So I think that's important to watch. All the indices, I would say right now, indices are green right now, but I wouldn't say that the data. This is one of those scenarios where it's good data, but good is bad. It's kind of going back again. And if you look for the most recent highs, the lows that we saw yesterday after that big drop down again, we are at the 23.6. It did hit it in the overnight. And again, I can drop it down to a 15. And they're all basically the same. I don't want to take too much time today, but that's kind of a decent top. It is right at the 23. You can see we just pulled back to it. And now you can see the big push down again. You may say, wait, we have good data. Why is this going down? Well, because again, they're kind of out of excuses not to raise it a point 0.5. And the reality is we talked about, oh, we're going to raise it 6 times. We're going to raise it 7 times, but it was always a 0.25. At this point, is the market saying, listen, we got no choice. It's going to be a 0.5. And are we going to get like some
Yeah.
of the talking heads have said that Citibank, 4.5s in a row. The other, a couple other people out there, 3.5s in a row. No Fed
The
president
idea of a
besides Floyd has said that.
soft landing, the Fed wants to ease it. There's going to be
Yeah.
it's not going to be this nice, smooth, easy.
Even if you pull a
They're
Band-Aid
going
off
to have to take
softly, it hurts.
yeah.
So,
Right.
yeah.
It's right. It's like
Yeah.
pulling off a Band-Aid is exactly right.
Yeah.
So,
and again, here's ES at a 23% 6 pullback. Again, can we shoot down? Yeah, I think we potentially could because again, the good data. It's people start talking about, hey, listen, it's great. We're down to 3.5%. That's wonderful. Oil's even below $100. They're out of excuses. I think the market's going to have to start preparing for it. I'd love to say that it's not going to be a negative day to day, but again, if you look at the actual news headlines out there, it should be more of a negative day. And again, there was such a big, everybody talking about how we ended the quarter negatively. And you're seeing all the articles today. Is April Fool's Day going to be an update? Because that's what history tells us. Well, when you say comments like that, it typically does the exact opposite because if people are like, "Oh no, April Fool's Day, it's always the day
They're
that the
gonna
market
trick
goes
us.
up." Yeah, they say that on purpose. And again, 23 pullback. If you look at NQ, guess what? 23% pullback, 23.6 pullback, and in an area where we used to have sellers, we've kind of chopped through 5 times, so it is kind of a Harry Potter setup. It did trigger, it's always on the way. So again, kind of the same scenario with NQ. YM, we're a little bit above, right? We're a little bit above, but what's interesting about this is if you do the high to low, again, we just kind of pushed through and did form that base there, but take the most recent, just the drop here and here, you can see it was the 50 that we were flirting with, and you can easily draw a level of
Yep.
sellers there. We're already starting to push off of it. Russell, same exact thing. You can see that it was an old level. It had been hit a few times. We're looking for it to break through. We had 1, 2, we had 3. 4 is what broke, and it did give us a pullback yesterday, not for the Harry Potter, but for actually the level right above. It also hit and is starting to roll back down again. Now, again, you may say, is that all negative? Oil actually holding and looking like it's going to continue to drop. It looks right now
Which is
for the oil
crazy.
market. Yeah,
Yeah.
but again, oil under $100. The big pressure with inflation is, holy crap, gas is so expensive. Guess what? Gas is not expensive now. It's under $100. It's $98.92.
That's
So
expensive.
they've lost the employment situation. They've lost the transitory thing. Oil is now under $100 because, again, Savior Biden is going to, produce 150 million barrels out of the reserve. So that's going to be there. So honestly, the Fed has absolutely nothing left. I mean,
Yeah.
put it this way: if they make any comments about, yeah, we're recession, we're worried about recession, so maybe 0.25. I want some of whatever they're eating. That's all I'm going to say right now. I'm going to put my order in right now. Delivery, because oil's down, gold is down. Gold right now, the gold market is saying, yeah, it's coming. The 0.5 is there. And it's starting to accelerate from where the news is. We were hoping that it would grind higher to give us an easy short. All it did was pull back right beforehand. It actually found a level. I mean, to say that it didn't, I mean, there's a level right there. Ascending wicks, a green candle and a pullback, large push through. And what did it do? Half hour before it rallied up to that, you see that gold's like, they're raising. Gold's going down, and silver also accelerating to the downside. And again, it's very sloppy. Silver tends to be a little bit sloppier. So again, all the signs right now in the market, not from talking heads, all the signs in the market is, holy crap, we're going to do this 0.5 thing. It's coming. Be ready.
Yeah.
And even things like Bitcoin, Bitcoin, go back down to the 30-minute real quick. Even the cryptos, we had that large rally up and people were like, yeah. And now it's like, oh God, it's coming back down. And it's starting to rally a little bit because people are getting worried. And then bonds took a big push down as well. So again, remember, bonds go down when the interest rates go up. So, seeing this large gap here is kind of like they're raising. It's going. It's happening.
I got a question for you.
Yep.
Just because I know that someone's going to ask, or someone's going to be, if you go back to oil real quickly, we know that 100 was a support. It's broken 100. We're still below it. It looks like it's going to actually, I mean, now it's trying to rally back up a bit. Does that 100 become resistance on the, or is can we not make that assumption because too much of this is being driven by what's going on in Europe?
Yeah, I mean, I would say here's how I'm looking at this. If you look to see when the European market opened, okay, right here, this really between the red and green, this is the European market. So their reversals typically come in, again, 2 hours past. 5:30 in the morning is when their reversals happen. That 5:30 occurred right there. That red candle is their 5:30. So this is kind of what the initial push was. It was up, and then they put the reversal, again, playing the same type of high. US session, kind of, it's the same thing. Not that we can use a measure move everywhere, but if we use a measure move, what the buying pressure was for the open, again, you can see that buying pressure comes in right about there. We're back up in that 102, 103 range.
Yep.
And the reality is, if everything's good in the economy, again, more people are getting hired. Not as many here, but again, it's still a net positive from last month. This means more people are working, more people are driving, demand is higher. And, at the same time, we have suspending this, knocking things off. So, are we still in the kind of, yeah, we're producing 1 million more barrels a day. That's awesome. It's going out. That's, again, that is increasing supply. But again, how long would that, is that going to justify the amount of people being hired, the unemployment rate coming farther down? I think the true fundamental reasons out there are that it is going to go higher. I don't think this is over yet. And again, when we're attacking, gas depots and fuel depots and things like that, I think that story is going to unfold more. So, for me, I'd love it under $100. I think $100 is going to be somewhat of a magnet right now on both sides. When it goes below,
Yeah.
it's going to come back up and use it as a stabilization point. I'm not willing to say every time it hits this $100, we're hitting the sell button, because the reality is that million barrels is only good for 100. It's 150 total, so it's only good for 150 days.
Yeah.
Um,
And then right, and then what?
Yeah, I'm
Right.
just saying that 150 days, guys, do the math. How many, that's basically just under half of a year. Add half of a year to where we are right now. It just happens to be when the elections are.
It does get us through summer, but I don't know if that's enough to really get us all the way through summer. If people
Yeah.
are out and about, if everyone's
Yeah.
coming out of their house and doing stuff,
Yeah.
people start traveling.
Yeah.
With COVID coming back down, I don't know.
Yep.
This is going to be.
Yeah.
Get your
Yeah.
popcorn. Get ready to watch. This is
Yeah.
going to be entertaining.
And remember, most governors that put that tax hike on, or that tax freeze on gas, it was only for 30 days. So not only do we have the summer increase that's kicking in, we also have the tax holiday on gas kicking in as well. So yeah, 100 feels great, but when your gas goes up 50 cents, it's like, oh, because remember, over 100, it's above $4. So it's just, if you're under that right now, it's because of the tax holiday on gas.
Yep. So, well, with that, any questions for Nadex, please email us, customerservice@nadex.com. We are accessible to help you with any of your questions. Brian and I are also accessible. Our emails are on there. You got questions for Brian, you can catch him at support@keeptradingsimple.com. I'm accessible at todd.rich@nadex.com. Brian and I do answer our own emails. We're here to help. And really what we're looking at is it's the start of a new quarter. The markets got clipped going into the close yesterday. And they tried to rally a little bit overnight, but really it's digesting
GameStop rallied overnight, Todd.
Oh,
Your
GameStop
favorite
did go
stock.
because they're splitting their stock.
Yes. April Fools. But yes, it
Yeah.
did rally yesterday, guys. Big.
So, no, there was definitely some entertaining stories out of the markets yesterday. There was even the Activision story. I think some people are going to go down.
Oh yeah, I think so too.
Some very big Hollywood hitters made an incredibly perfectly timed trade.
What was it? Was it 60? Was it 59 million that they made off of that
59
one?
million in 3 days or something like that.
Actually, one day. It was
Or
one day. It was they put a gigantic trade on one day before options expiration and happened to make $59 million.
Then the announcement that Microsoft
Yeah.
is going to buy Activision for $90 a share and $95 a share, and they bought calls at 40.
They timed it perfectly. I mean, it's amazing how that happens. I need that crystal ball.
There's no inside information. Martha Stewart went to jail for $200,000. The regulators are going to know a $59 million trade, and they're going to go, wait a minute. Something doesn't smell right. Especially when the CEO of Activision met with them.
Yeah.
A day before that.
Yeah.
For lunch.
Yeah. Coffee.
I don't know. Greed and entitlement. It's bizarre. All right, with that, Brian and I will be back again on Monday. And until then, everyone, good luck in the markets. Enjoy your weekend. We will catch you again on Monday. Thanks for joining.